Good morning and welcome everyone to the Money Control live stream. You're watching the opening bell and I'm your host Nikki Mirchandani, and with me today is my colleague N. Mahalakshmi, who is the senior consulting editor at Money Control. Of course, it's clearly Modi magic at play. Indian shares look set to clock fifth session of gains. BJP's election sweep in 3 out of 4 states calm populism fears, allays market concern about political risk. Well, BJP wins in Hindi heartland, MP, Chhattisgarh and Rajasthan. In Telangana, the Congress has defeated the BRS by just a thin majority. Talk about global cues. GIFT Nifty indicates a gap-up start coming in for Indian equity markets. Sees Nifty around that 20,600 mark. Overnight, US stock ended higher as US Fed raises peak hopes. S&P locks in the highest close of the year. Asian shares edge up. Rate hope faces data test through the course of the week. And talk about FII data. They've bought shares worth around 1,589 crore, and DIIs too have purchased equities to an extent of 1,448 crores. Well, FII continue to be the buyers, at least in the index futures, stock futures and bank Nifty futures. They've turned in sellers for Nifty options and bank Nifty options. What comes in the ban is Delta Corp. Let's just say it's new in the ban. What comes out of the ban is Balrampur Chini, Hindustan Petroleum, India Bull Housing Finance, RBL, Z Limited, Hindustan Copper, MCX along with India Cement. We'll talk about option Qs, PCR's data. Well, not really relevant today, but 1.3 versus 1.26 indicating more puts rather than call. But I'm going to toss it over to ML and check with her assessment of the markets and how does the election results really, state election results really stack up for the market. Seems to be like a perfect cocktail party where you have some support coming in from the macros, a strong earning, along with that now political uncertainty also seems to be past us. What do you
absolutely, you nailed it. I mean, this morning it looks like there is absolutely no worry on earth as far as markets are concerned. Two big worries. One is the election, which is a big event for next year. People were expecting that state elections outcomes will not be as favorable, but the market could shrug off and, move towards a certain outcome in the general elections. That, of course, we have seen a positive surprise this morning. Obviously, markets are reacting to that. The second thing, of course, is, and a more important thing, is the fact that we have had fantastic GDP numbers, which only reaffirms the fact that we are firmly on the growth trajectory. So two big things are favorable. The global setup, notwithstanding the geopolitical risks, that also looks favorably poised. So this morning, definitely, it's not a time to worry and think about risks. Everything looks picture perfect, and that's the set for today. But of course, we have to see as things pan out.
All right, let's discuss the trade setup, strategies for the day and state election impact with Rohit Srivastava, who's the founder and market strategist at indiacharts.com. And of course, alongside, we also have Andrew Holland, who is the Chief Executive Officer, Avendus Capital Public Markets Alternate Strategies, joining us here. Morning there, gentlemen, both of you. I'm going to first go across to Andrew and check with him. What does he make out of this current stance, and where does he first see the markets heading to which levels? That's one. And also, the triggers that could drive the markets higher to the next big number that you're looking at, and also factors that you think that could be party poopers.
Yeah, it's been a hat trick of wins in the past week, hasn't it? First setting off last week with the GDP figures, and I'm sure that GDP forecasts are going to be raised, going into 2024, and that leads its way to, obviously, revision and earnings going forward. It's something we talked about before, Nikki, in previous conversations. So that was the first one. Obviously, the state elections has been a very, very big positive surprise for the markets. And finally, whilst it may have been seen as a slight negative initially, the move by the RBI to tighten kind of risk weights, I think is probably the kind of the holding back of the sector, and maybe there's a few downgrades to come because of slower loan growth. But I think we're probably past the worst for the banking sector. So I think these combinations now mean that initially, you'll probably see the market moving anywhere, between 2 to 5% as the euphoria of these factors come through. And I think going into next year, 2024, I think you could look at earnings upgrades, and therefore, whether you end at the end of this year in the Santa Claus rally, I think you could probably look at another 10% from there.
Sure. I'm just going to quickly address in the market open and come back to you, gentlemen. 20,555 levels. That's what we're looking at when it comes to Nifty 50. It is a good start. Well, we were anticipating roughly around that 20,500 to 20,600 mark. That's where we're sitting at, with gains of more than 1% out there. Talk about PSU banks. That's also one that we need to keep a close eye out on. Apart from Adani Group of Companies, of course, those are going to be interesting ones to watch out for. 2.8%, more than 2.5% gains coming around for Nifty PSU Bank. Let's also talk about Bank Nifty, just to see how is the trend stacking up for Bank Nifty Index. Well, gains to an extent of closer to 2%. Clearly, you can see PSU banks doing extremely well in trade today. Adani Group of Companies also is something that we like to watch out for. But in terms of the top gainers and the top losers that we have on the screen, just the top gainers and the top losers, just to see where the market sentiment is essentially stacking up, or let's just say the stocks which are really doing well in trade today needs to be watched out for. Well, for now, it is a good start coming in for the markets. We are looking at good levels, both for Nifty, Bank Nifty, and also PSU Bank. There on the screen, Nifty gainers, Adani Enterprises, Adani Ports, and NTPC. No surprise for guessing there. L&T, SBI, BPCL. These are some of the other top gainers that we have on the screen. So clearly, it's the blue chip L&T and SBI alongside Adani Group of Companies, which seem to be doing well in trade today. Let's also see if there are any losers today that we're looking at, and of course, address in the market breadth and go across then to Rohit Srivastava. Well, not really. All the 50 stocks right now are in the green. But ML, what do you make out of it? And also,
obviously very positive, but let's go across to Rohit. Rohit, fundamentally things look like everything is picture perfect. What's your take? How do things look technically?
So the technical position, since the start of November was really for a build-up, initially a bounce on short covering. And the only hurdle I think we had till this election rally kicked in, I should say, was at 19,850. So once we crossed that, we had our eyes set on 20,700. Now, with today's gap up opening, we are almost 100 points within that level. So the real question now becomes not the target that we were expecting, but what from here? Shall we continue this rally to newer highs, or can we really see it halt and pause or consolidate from here again? It's an open case. I think unless we really break certain levels, we should try and be on the positive side still for some time. And the reason for that is that, right from the start of November, we had a huge short position built up on the institutional FII side. It was the second highest short position on record, which had to be covered. Interestingly, they only started covering it last week after expiration. And so that position was down on Friday till around 47,000 contracts, still short. Typically, by the time you reach a market high, you do see it go into the long side, sometimes 50, 60,000 contracts, sometimes even 1 lakh contracts long before we can even say that, okay, we've probably gone too far to the upside, and we are not there yet. So in that sense, I think there should be more upside based on that data point. We should stretch beyond 20,700 as well. The way we'll play it is therefore trail our technical levels, to try and trend follow. As we say, trend following is the way to ride an entire move, and that's what we'll try to do here. Some of the headwinds, which are mostly global, they're not domestic. As you mentioned, we have had growth. We've not just had GDP growth, we've had earnings growth at almost 27% for the Nifty group and more than 100% for the mid caps put together, based on the recent Motilal Oswal report that I was reading. So I'm just taking those numbers. And any of that kind of growth, you sort of supported the high valuation for the time being. The question then you ask, okay, will this growth continue? And are there any headwinds which are not domestic? They're mostly global in terms of whether rates come down, does the dollar go up, and those kind of things. So as long as those headwinds don't face us and they're at least pushed back for a while right now, probably they'll come in again to hit us only sometime in Jan of 2024 or afterwards. So I think we do have that much time, which means it gives us, a couple of weeks to have, several more trades along the way for the coming month.
Sure, we'll come back to you, Rohit. So I want to just go across to Andrew and ask him a question. How do you see this progress over the next few, this rally progress over the next few months, Andrew? Where do you think will the momentum, will it continue on the same path that we have seen over the last few months, or do you see a decisive shift towards large caps?
I think you just put it very, very, very well. I think the big moves are now going to be on the large caps. They've been underperforming quite significantly, even though the market's been rising compared to mid caps and small caps. So I think there'll be a big realignment back to the large caps. And I think the other sector which I mentioned is the banking sector, which has really underperformed for quite a considerable amount of time, around 6 months now. So again, I think the combination of the expectations of lower interest rates next year, feeding through to India as well, is going to be another catalyst for the banking sector. So I think that catch up for the banking sector is going to come. I think some of the bad news has been baked in, and we're going to close to that bottom of negative news. So I think now you can see that big catch up for the banking sector, and that would obviously, given the weightage, lead itself to good strong performance for the Nifty as well.
Sure. Andrew, one worry there, I mean, the reason large caps have not performed is because, foreign, this rally that we have seen over the last few months has been largely driven by domestic money, which goes more into mid caps and small caps. And foreign investors have not been the propellers of this rally. Now, there are some concerns about, China. Even as of yesterday, there was a report about, more serious trouble brewing in China real estate, which is keeping foreign investors away. And there is a lot of money that has moved out of emerging market passives, which also by default, when you have, redemptions from emerging market passives, India also bears the brunt of it because you're part of that index. How do you see that equation? What is the China risk in your mind? And what is the risk that, foreign money could continue to move out and therefore keep a lid on large caps?
Yeah, no, it's an interesting point in what you're making there, because yes, the emerging market funds have not been seeing any inflows, in fact outflows, because of the China problems that we're seeing. But increasingly, I think, what the Chinese government or policymakers are trying to do is stabilize the economy. And I think that they're doing that reasonably okay. I think the big factor continues to remain the property market. And I think the policymakers there really need to take a big bazooka and fire some confidence, not just into, to the lenders, but also to the kind of consumers or the kind of retail buyers of property. And I think if they can do that, then I think you'll start to see the flows. Now, when that happens, China would probably get more flows because of their cheap valuations compared to India, but because you'll be getting flows into emerging markets, we will get our weightages, and I think that's coming fairly soon. So I'm less worried about that, and I do think if you take interest rates falling, which we've always said they would, very sharply going into 2024, then emerging markets will be one of the big beneficiaries of that, along with because of a weaker dollar as well. So I think that's the compelling case for emerging markets. So we will start to see more pickup inflows as China stabilizes that property market.
Sure, I'm just going to have a question. I have a question for Rohit. Rohit, historically, last 2 terms when BJP came to power, markets rallied around 19% 6 months prior to the general election in 2014 and almost 11% in 2019. You think this time around it will be no different? What levels can one look at for Nifty ahead of general elections 2024?
So I think we'll need to keep an open mind on that. See, markets tend to be anticipatory, so which means that in both the prior elections, they were sort of anticipating that win to come through. And also the social theory on this really is that if you're in an environment that is generally bullish, then there's a higher chance of the current government being re-elected. And if the market environment at the time of the elections, which is in the month or two around it, is strongly negative, then there's also a big chance that there could be a change in the electorate's stance to the current government. So I think that we'll really figure out when we get closer and closer to the election date. I would not be able to say that, exactly we should follow the same pattern. And this time around, I think unlike the earlier two times, there are, many other factors globally that we've all been worried about, which we don't know yet exactly how they'll play out in terms of, the trajectory for rates and the dollar, which is why we'll have to keep it slightly open. And I think we'll get a sense of that only sometime in, March or April of this year as to whether we're going to, take off into a rally into the elections.
Rohit, you gave a level of around 20,700 thereabouts. What's the timeline? Can we look at these levels by the end of this year? And also, what are the themes essentially that you think look interesting after this state election view?
Yes, see, 20,700 is almost reached because we touched 2,600 at the open today. So now we'll have to start thinking about getting to 21,000. And if that has to happen, it should be, I think, in the next month, which is whether it's by year end or the first week of January. We do have a seasonally tough period usually in the first quarter of the new calendar year. Every year we do see some kind of pause. It's also because you come closer and closer to the budget. Of course, this year's budget will be a vote on account. But the seasonal effect is always there. So I think we will see the best case scenario over the month. And that then pushes us to think about which sectors. I think you were having this discussion earlier with Andrew in terms of, whether large caps pick up. That's already happened. The mid caps have had a super run. I think you will see the mid cap indices slow down and the large caps pick up. And even better, you are seeing banking, make a comeback, which has been one of the biggest laggards. So if you think about it, the mid cap index has made an all-time high. The Nifty has done that. Bank Nifty has not. So the high that it made of 46,370 in the month of September or probably in July, I think that is likely to get surpassed in this move. And we are not there yet. So I think that is something we should really watch out for, is getting past the highs and heading to an all-time high in Bank Nifty. That's where you might get, good momentum.
Sure. Andrew, one question that I have for you. You think, you've of course spoken about banking stocks coming in a big way. Do you think FMCG stocks will also have a good run here on, as BJP is expected to incrementally focus more on the welfare schemes in the run-up to the union election? If yes, what's going to be your preferred bets looking like?
So I think there's more exciting subsectors is FMCG, and I know we talked about this before again, Nikki. I think the premiumization of that we're seeing across many different sectors, does lend itself to the beverage sector in particular, and both alcoholic and non-alcoholic, and I think that's a big trend, and we're at the very, very start of this premiumization for the beverage industry. So if I was to play within consumption, I'd go for the beverage industry. I think there's a huge amount of earnings kind of upgrades to come over the next two to 3 years. So while valuations might look a bit high at the moment, I think 2 years down the road you'll be thanking the fact that you bought into these stocks.
All right, Andrew, we're just going to leave it at that. And Rohit, we're just going to leave it at that. And thank you so much, gentlemen, for taking out the time and having this conversation with us.
Thank you. Thank you so much for having me.
All right, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching, and do tune in for more. And please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for the rest of the updates, stay tuned into moneycontrol.com and Money Control app.